to all get up, please. Stand up, please. Just, yeah, if you could. Super. So you all ready? This is like nothing like you know it before, right? Everything you know about financial services, we're going to change that in the next hour. Yeah? So I just want you to make sure you're ready, willing to listen, and ask a lot of questions. Ali has already told me that you will not be allowed to go home today if you don't ask me questions. You know? So I've come a long way, and so the more interactive we make it, the more fun it will be. Otherwise, I'm used to listening to myself, and it's not so much fun. Yeah. So please have a seat. This is Karachi is where I was born. Have a very fond memories. Went to school here at St. Pat's. We started talking a little bit about starry nights, and the professor and I were exchanging some looks, talking about Masai Mara and being out there and what wonderful nights and starry nights. And I was trying to explain the concept, which is a very Urdu concept, right? This, for me, Karachi is a part of my jigger. And if you try to explain this outside to the world about love, and most people think about, most poetry is about the heart, right? And when you say to someone, but we to translate our poetry from the jigger ka tukra, So how does that work? And so we love from our liver, So I'm not sure how that translates, but very important. Since Ali started talking about his niece, I will talk about my daughter, right? And try to put a little context to where we are and what's happening. My daughter, this is about 2 years ago, she's 8 now, and she was studying in a school history class at 6-year-old. They're telling her about the Victorian times, which is late 1800s, what the world was like, what was going on, how did people live, how did they interact. And so she's been learning about this stuff. And but she was sitting in our living room on the iPad and kind of saying, I'm bored. The TV was on, iPad is there, and she's like, bored. I was like, how can you be bored? Like you have so much options to do so many things, right? And then I started describing my life, right, as when I was her age, and said, we only had one television station, and it was PTV, right? And it used to be, the cartoon hour was 6 to 7. Right, Khabarnama was 9. Then once a week on Thursdays you used to get a movie. If someone had a computer game in the neighborhood, everyone had that computer game. You were the most popular kid in the neighborhood, right? That's how you interacted. And so the idea that we did not have Google, we did not have an iPhone, we did not have an iPad, we did not have any of these other tools and toys and stuff that our kids are used to. So she listened to me very politely, very attentively, and then as I walked out of the kitchen, she turns around to my wife and says, I did not realize that Baba was born in the Victorian times. So this is a little bit questions for you, right? How many people use email? Yeah? So pretty much everyone, yeah? And how many people here have a smartphone? Right? And so, it was not long ago. When the first iPhone was launched? Anyone? No? 2007, Jan 9th, 2007, right? This is 2017, 10 years. And so already, when I was recently in Korea, the phone as we know it, the iPhone that we all think is very good, and we all think we are in the current age, in 4 or 5 years' time, we're gone. They are already working on technology where the device itself will no longer be relevant. Yeah? So the things that we think we are catching up to, and the use of email, and moving away from paper and going to email is a big deal, right? There's still a lot of business is conducted on paper, and the fact that we are sitting here thinking about new world and saying because we have smartphones, we somehow make this work, is already defunct technology, already redundant technology. That's how I want you to think about this world, right? So here's a question for you guys: who do you think is the competition of JS Bank today? Who would you rate them? And just shout it out and I'll put it on the board. Who is your competition? Which is a bank? Which organization? Who do you compete with when you go out in the marketplace?
All the banks.
All banks? So name some. Faisal Bank, yeah. UBL. Al-Falah, yeah. Know them pretty well. Yeah. Who else? Standard Chartered, okay. Who else? Who outside the banks? So we heard, Ali Saab talking about mobile wallets, right? Upcoming fintechs maybe, but they're not. But you don't really have any. We won't get to that. That's not allowed in this question. Today's competition, right? So some mobile wallets. We telecom, right? So maybe some telecom stuff. Maybe on the edges, payments and so on. Maybe we'll talk more about that. So if I tell you that this definition, your competition, that these guys are your competition, is invalid. They no longer are your competition. They're just like you. What's the difference between your current account and their current account? Right? What's the difference between your credit card, their credit card? What's the difference between your mortgages, their mortgages? Zero, nothing, right? So that's the thing we're going to try and talk about, yeah? If that makes sense. So here, I was running a company, I was not running a company, I was running a major business within First Data. It was $1 billion business. I had 6,000 people working for me, 54 countries. And then one day, 2010, I woke up and said, that's it. I'm no longer going to do this. I'm going to go find something else. And the three of us got together. We knew each other, of each other. We had done some handshakes, and we got to know each other over the course of time. Actually met Sean in a taxi in Dubai, going to a conference, to a Braj conference. And we got sort of stuck in traffic, spoke for 40 minutes, went to the conference, then met each other for dinner. And at dinner, we shook hands and launched Anthemis, right? And the idea for us in 2010, if you can imagine the idea of starting a financial services business, 2009, all the crisis going on, 2010, you leave your lucrative billion-dollar empire and say, I'm going to go do this thing. You can imagine what my friends were calling me, right? There was nothing polite about that conversation. They thought we were crazy. And so we started this business really with the idea, simple idea, that we're going to reinvent financial services and every aspect of it, right? So the question for you guys is to really think about, because there's a lot of misunderstanding of what this means, yeah? This word in terms of fintech, right? What does that mean? What is fintech? And there's a lot of folks who go and talk about it. So let's throw some answers out. What is fintech, do you think? Automated transactions, okay, that's one, yeah. Financial landscape enabled by technology. Big sentence, okay, yeah. Big definition, yeah. Anything else? Financial technology, yeah. So if in our definition of fintech, we take the tech part, this part here, completely for granted, right? It is like, there's nothing special about it, guys. Nothing special about technology. If you don't have technology, need not apply. Need not participate, need not come into the party. It's okay, don't come in. But technology doesn't just get you an entry door, right? There's nothing special about technology. It's the same technology. All the fintech companies are using the same thing. And I'll explain that. I'll go through the model and try to tell you guys. There's nothing special about the technology. What's really special is the fin part. And it's not about the automation of transactions. This is one small piece of it. It's not about financial inclusion. It's a tiny piece of it. It's not about digital. It's a very, very tiny piece of it. It's a really complete reinvention of how we think about financial services, right? And if you walk away with that thought process, that what is the difference here, that's really what we're trying to get to, right? It's a completely different way of thinking about financial services. So the best way, in 2010 when we started the company, we had the really, the privilege, the opportunity to do this, right? There's a blank piece of paper. So we could reinvent it from a blank piece of paper. That's how we started thinking about it, yeah? So our business today is we are both investors. So we invest, it doesn't show up there. We are investors in early stage companies. So all the companies that you talk about, Ali mentioned Simple. Simple was the first digital neobank. We invested in 2009. You know what was there in 2009 when the company showed up to us for investment? It was a blank piece of paper with two founders saying, we really want to rethink this, banking space. We invested in insurance companies, in kind of Betterment is a wealth management play. We have invested in Climate Corp was another one of our unbundling of insurance kind of concepts. That was like 2006 was the first investment we put into it, right? So we invest in really early stage ideas where we think they're going to make a difference in the next 5-10 years. So our focus is on finding that really disruptive idea and back some really good founders. So oftentimes they are first-time entrepreneurs. They haven't done this before, but they are passionate about this idea. And that's where we try to invest. And we invest globally around this. We also have a advisory business where we work with large financial institutions around the world, where we're really working at the board level to help them understand how to take, understand this new fintech landscape, this new financial services landscape, and how to really interact with it, how to create the right organization behind it. Yeah. Then we also have an institute where we're working very heavily with the regulators, with academia, with policymakers and so on, to try and help them to understand what kind of policy they need to create to really take advantage of the innovation that's happening, applying to scale, which is where all the financial institutions are and millions of customers, and how do you create the right kind of environment for that to happen, right? That's what we're trying to do. So this is the Technology Revolution of Financial Capital is a book written by Carlota Perez. She's an economist. She is a resident scholar with us at Anthemis. She wrote about this book that every couple of hundred years there's been a major shift in technology, right? The shift in technology has caused a lot of disruption in society, and until the society realigned itself, then the model realigned itself, then the business became great again, yeah? And we are going through again a major shift in technology. We are moving from the industrial age to the information economy. You see it everywhere in our society, right? The way we travel, the way we read, the way we consume news, the way we are interacting with the outside world, the way we interact with our friends and family, social media and so on. That's all the information age coming in, right? Never before, the issue for us as leaders in the business and stuff, never before has the consumer been leading the charge. It's always been a big organization, government or military usually. That was where the real technology used to happen. They used to figure it out, and then over time shifted down to the consumer, right? This is the first time that the consumer is at the front of it, yeah? So this is why it's like so hard going on, because every aspect of how we think about business is changing, yeah? So this is the world we are living in, right? And so what I'm trying to convince you guys is not only just that the banking model is changing, the way you access banking is changing, but the way we organize is changing, the way we are thinking about it is changing, the way the talent work is changing. Who do you have in the room that's going to create the future products with you is different people. It's also you guys with all the experience, but you have to have different skill sets too, right? It's not the same. You cannot go reinvent this stuff by just doing the same old, right? So this is my version of Ali's chart, right? This is a great organization, has been around for 100 years. Started at the turn of the 20th century. J.P. Morgan, Rockefeller, those guys created this organization. Everything we know is devised around this organization. We know exactly who has the capital. We know where the balance sheet is. We know who the shareholders are. We know where the management is. We know where the customers are. We know what technology is manufactured, who owns the IP to the technology. We know how the profits are distributed. We even know how to get talent into it. The young graduates that come through here, and the MBA program people that come in the middle of this thing, right? We know all of that stuff so well. That's what we've learned over the last 100 years, right? And 150 years, maybe more, yeah? The new world looks like that. I no longer, when I'm hiring from Anthemis, I no longer look at where a person went to university. It's almost irrelevant. Right? My son is 17. He will go into university, normal university. I am convinced that by the time my daughter comes around, she's 8 now, that the normal path of going to get high-level education, that is university, would no longer apply. That's only 10 years away. Yeah? So this is the organization where you don't know who is the capital. Where's who owns the customer? Who's providing a product? Who's providing the servicing? The example we talked about, which is the example where you had a chance to invest $1 million. It was really they're taking a slice of it and saying, we'll take the capital from you guys, we'll build it up, we'll take a customer, we're taking a particular value proposition, and we're going to be great at that value proposition. Really, really make it good. Yeah. And so they're no longer thinking we have to provide all the services that you guys as a bank think you need to provide. They're just taking the price of that transaction and saying we are going to make the transaction the most valuable thing we can do. Yeah, that's how they're thinking about it. So this is what happens, right? When someone shows up in innovation, we all kind of say, yeah, we're so busy, we know what we're doing, normal business to run, profit margins to meet, customers to hire. Yeah. And then with something like this happens, and you say, this happened around the world. Like, this is not just, we're talking about Pakistan here, but in the UK, there was no fintech. We were crazy people only 7 years ago. 4 years ago, we were crazy people. We used to go around the banks, people used to listen to it politely and say, oh, this is very good, very interesting. Thank you so much for coming in. Wow, what a great idea. And then they slammed the door behind us and with these stupid people, And so everyone thought a very narrow definition of what was happening. At the time, there was a lot of stuff going on payments. So people thought, fintech is payments. Nothing to do with me. I'm in the retail banking side and the payment side, yes, but I'm on the lending side. Nothing to do with me. I'm the corporate bank side. And nothing to do with me. I'm in investment banking. Nothing to do with me. I'm in insurance, right? That was what the people were saying. So just a few years later, the picture, that's what it looks like. Every aspect of the bank, every aspect of the insurance firm, every aspect of the capital market firm, there is someone out there competing with you guys, right? And doing it faster, better, cheaper. Yeah? They're all kind of thinking about this stuff. And this is not just a phenomena which is sitting, in United States. Actually, very little fintech happens in the Valley. Some fintech is happening in New York, a little bit in Austin, Texas, in the Carolinas. London is a big scene. Europe is coming up. Berlin, Madrid, the places like that are coming up. Not so much Madrid, Barcelona, I should say. China, of course, China is a special case. Yeah, a little bit India. But this is where interestingly is happening. Like I was just in the last 3 weeks ago, I was in Kenya. A lot of stuff, interesting things happening in Kenya and how they're expanding, right? And where they're going and what they're thinking about. But the good thing about it is that no one's figured this out. Right? It's not like we are so behind. Oh my God! I'm a mentor to Plan 9, which is an incubator in Lahore, and a lot of amazing companies coming out of that. Right now, I'm supporting some of those companies, but they are not really financial services companies, but doing some other stuff. But some really amazing talent coming out. So this is. But the idea is this is a global phenomena happening everywhere, and so when you think of your competition, you were still thinking about the competition, one in the bank's terms, but then you were thinking of competition in local terms. And the competition is global. There are people already targeting, the stats are here. Look at the stats, 200 million people. How much people have access to banking and financial services. Guess what? You're not the only one looking at that chart. All the world is looking at the chart and saying, I want to get into this. We were just at, Ali and I were at Invest Asia conference in London yesterday, 2 days ago. And there are, 100 investment firms with billions of dollars at their disposal looking at and wanting to understand about Pakistan. Yeah? And so that's what you need to think about. This is, there are folks out there who are looking at the same data you are, right? This is, as Ali Saab said, this is not hidden data anymore. It's not something we were used to keep. It's like we won't tell anyone that we have 200 million customers, consumers out there, right? They all know they're coming. So this is, I'll skip that because it's too hard to read. This is the other thing about this, right? Where we talk about innovation, you cannot get to a light bulb by lighting 1,000 candles. No matter how many candles you light, no matter how much you keep doing in what you're doing, better candles, nice smell to the candles, whatever you want to do, you cannot get to a light bulb. So you have to rethink how you're doing it to get to a light bulb. You cannot get to the digital age of financial services by just doing what you're doing better. It doesn't work that way. It completely doesn't work that way. Yeah? So we'll talk about this and model stuff. So the thing is, of course, the view is, unlike other industries, where someone comes in, Uber comes in and all the taxi industry is dead. Amazon comes in and all the bookstores are dead. It doesn't really happen that way in financial services. Right? People, it's about money, it's about balance sheet, it's about distribution, it's about trust, it's about brand. But what certainly happens, which what Ali talked about, is that you rust away. Right? So if you guys don't change your stuff and the opportunity over the next 5, 10, 15 years, right, then you will rust away. Right? It's not that you will disappear overnight. It's not all the banks will just disappear and saying all MCB and UBL are all gone. It will just be people will go different places, right? And so that's the criteria. We did a lot of work around the consumer and thinking about the consumer and what that means. What are they thinking about? And the consumer used to be like this, right? We were very clear about the consumer. They were born, Then they were, kind of went to school. Then they got married. Then they kind of, get their first car. Then they had the education thing. Then they got a mortgage. It was very, very clear. It was, usually all this stuff related to the first job. Yeah. In the new world, it doesn't work that way. The consumer doesn't think that way. They're looking for, kind of interaction. First of all, they're not necessarily going to the first job. They're becoming entrepreneurs. They're working in different environments. The interaction is different. They don't really care about the brand anymore. Oxford University, one of the largest, employer of their graduates was HSBC Bank. Yeah, this is Oxford and Cambridge University. One of the largest employers was HSBC Bank, just about 7 years ago. 2 years ago, you know how many people from Oxford or Cambridge applied to HSBC? Take a guess.
0.
Correct answer. 0 people applied, right? So folks are no longer looking for that traditional route to get employment and so on. So hence their requirements are different, how they interact. So their requirements is like, so we have a bank, is similar to simple called Moven, right? As Moven is a mobile bank, as you're making your payments, you're buying your groceries. In the interaction, as you interact, is saying, hey, by the way, we noticed that you are spending a little less money this month than you normally do, and so you have this extra amount of cash here. Could be $25, could be $5, doesn't matter. We are going to move it into your savings account, which is a higher interest rate as opposed to just leaving your current account. Is that okay? As you pay for your groceries, right? Click, gone. And so that interaction about how they're doing this stuff, how they're kind of interacting with you is very, very different. People, the current account, no consumer I know, no one I know, right, walks around and says, yeah, really when I want to grow up, I want to have a current account and a savings account and a credit card and mortgage and loan products, car loan. No one walks around that. That's the things we have created as an industry because of the economies of scale, because of the org structure we created. People want access to money. People want savings. People want some, investments. But they don't want to go into and say, give me this current account so I can move money from a current account to my savings account, and from there I'll pay my credit card. It doesn't work that way. We have created this artificial product infrastructure, and the consumer doesn't care about it at all. Yeah. So this is also a misunderstanding, right? People think that this is about the digitally native. These 20-something, 30-year-olds, people use the term millennials, who, by the way, just turned 32 this year, right? So millennials, people think it's just all about millennials. They don't really have money. The really people who have money are the 40 to 70-year-olds, and that's our consumer base. That's the professionals. That's who have the money. So we really focused on that because nothing to do with us, because the millennials, who cares? The reality is it's not about the millennials. It's about the digitally fluent, right? Every single one of our businesses has a profile where they have some folks who are younger. A lot of the folks coming in are, much older. Some of the businesses have 60 plus. They're almost like 20% of the business is their consumer base. Those guys are exactly the same way they're interacting with the rest of the world. My father, 84-year-old, does not buy a newspaper anymore, right? He kind of goes onto his iPad and reads the newspaper. He consumes his stuff that way. He consumes his travel stuff that way. He reads about the world that way, right? So the same thing is happening here in financial services. They don't want to go line up and even go to a branch, ATM, or even to a mobile, which kind of says, here's a current account, here's a savings account, here's something different, right? It doesn't work that way. So the point of this whole thing is, this is the way we think about the consumer. We think about them and saying, okay, so we have these different departments in the bank, right? Each department, we need to have an overall somehow magical system that the IT team is going to provide that's going to bring all this data about the customer together, and we'll kind of think about them as a current account, a savings account, and a checking account, right? No startup, your competition, future competition, right, thinks about them. They just think about the customer and saying, what's the need? What do they need to solve for? What are they trying to do? They don't think about the product structures that we have inherited, right? They're thinking about access to money. How do I do that? What's the best way to provide me a service, right? And so also these guys are, interestingly, in financial services, if you do something better, 20%, 30%, cost-wise, it doesn't really change much. Consumers don't move because you're doing something 27% better, 30% better, right? Consumer move when you're doing something 10x better. And these startups, when they think about this stuff, when we invest in them, we're looking for that disruptive idea. We're saying, is this 10x better? Is this going to be at least 10 times better than what the current proposition is? That's the only way it's going to go to millions of customers and scale, right? So when they think about this, they're thinking really about that. They're not thinking about, what we all confuse ourselves with. They're not thinking about tech for the love of it, right? So tech is good. No, they're thinking about profitability. They're thinking about what's the cost of access? What's the cost of servicing the customer? What's the cost of underwriting? How do I scale this business? What are the ingredients I need to have to put it all together, right? So that's what they're thinking about. So this idea that these guys are just creating some apps which are fun stuff and people share it and pay their bills and stuff and that, they are really thinking about the business. And they're thinking about this financial services business relying on some of the new technology and tools and so on. I'll talk more about that, but really thinking about the business and really thinking about how am I going to be 10x better than you guys? Yeah. So this is also a little bit of a misunderstanding, right? And it's very, very important that if you walk away with one thing, please walk away with this clarity in your minds, right? The clarity in your minds is there's a confusion between what's mobile and what's digital. Yeah. So if I use the example, all these hotel chains, including the one we in right now, have wonderful mobile applications. They have spent millions of dollars on their mobile applications. Every hotel I go to, travel around the world, I can look up the rooms before I get there. I can book my rooms. I can look at the menu. I can look at what the food is. I can look at the gym. I can book my gym appointment all over the mobile. Yeah. But if Marriott wants to go create 30,000 rooms new around the world, yeah, think what they have to do. Think they have to do capital-wise, regulatory approval, you have to buy the piece of land, have to train how many people they have to train, hire, get the consumers in, get the right kind of staff in to manage this stuff. Think that's what they have to do, 30,000 consumers, right? Airbnb adds 30,000 consumers every 2 weeks. The hotel chains are mobile. Same crappy product on a mobile. Airbnb is digital. So when you think about and saying we have become digital because we put something on a mobile, that's not even close to being a digital thing. It just means that you are more cost efficient. So you have made the 20-30% improvement in your product set and access to consumer, and there's a little flexibility and a little reliability, and they don't have to come to the branch. All that is good, but you're still providing the same old experience just on the mobile. Yeah. So if anything you walk away with, if nothing, remember nothing else, do not confuse mobile as being digital. Yeah. So this is how, just changing now, right? This is how we think about the world, right? So when we think about investment landscape, when we think about investing, we think about the world and saying there are lots of opportunities in retail banking and corporate consumer finance, wealth, business, corporate banking, payments, capital markets. Nothing, overly excited about the categories. That's how we think about the financial services lens, right? Those are all the opportunities, and within that landscape, these are the companies we have invested in, right? Some of them are like now standout companies in the fintech world globally, right? But all of these companies are, tech for granted, disruptive, scalable. We are not thinking about, we don't invest in them and saying, okay, we're going to invest in this thing and hoping that JS Global will buy them out. We're investing in them because we want them to be standalone businesses forever, right? And how we scale them and how we make that happen. So I'll give you some examples just to give you illustration, a little bit, maybe explain what some of the folks are doing out there, right? And so also just be clear about this, right? It's there are thousands and thousands. When we first started in 2010, 2011, there were maybe 50 fintech companies around the world. Really? Yeah. And I could probably count them on the back of my hands, together. Now there are thousands and thousands of companies. Doesn't mean that they are all great. Most of them are crap, horrible businesses, because they have no business. It's not, just because someone walks in with jeans and says I'm casual and saying I'm a fintech entrepreneur doesn't make it a great business. So all the experience that you guys have in this room about what is a good business applies, right? It's just that you have to take that experience of how to develop a good business with a new set of skills, a new set of tools. Yeah. So this is not about some fancy technology. Do not get confused with technology makes it a good business or fintech. All fintechs are great. There are a lot of this business that are just horrible. They're not businesses. They don't kind of even there's no revenue. Their cost of access is zero. There's no disruptive. They're just kind of tinkering with stuff, right? So first one is Fidor. This is a fully regulated German bank sitting out of Munich. It actually just got bought out by a French bank, BPCE. They really thought about this idea, right? They have this concept of social. So all their customers are in this website that come together. They can talk to each other, the customers, not to the bank. The customers talk to each other and saying, hey, I heard that the JS Bank's the new products come out. What do you guys think? And they're talking to each other and saying, hey, but what about the interest rate product? I heard that someone else is giving better rate products and so on. That's all happening within the community that the Fidor Bank has created, right? And as they created this thing, they participate in this, but with a Fidor tag to it. And what they're trying to develop is consumers, the loyalty of consumers who really understand and participate in the development of the products. Yeah? So they wanted to, for example, they want to develop a new savings product, right? This is like asking you guys to develop a new current account, yeah? And they went out to their consumer base, their community, right? Some of them are not consumers, some of them are just in the community, and they gave them 10 euro cents, so 10 cents, an idea, and said, whoever can give us all what's the competition doing in the market, in the German market, please tell us the ideas. So by the end of the weekend, it started on Friday, by Sunday night, they had 4,000 ideas. So they paid 400 euros, as opposed to whatever you guys paid to McKinsey. They paid 400 euros for all those ideas. More than 400 euros. Right? So 400 euros, right? And by Monday, they had 4,000 ideas from all the competition, everything they wanted to, what the consumer wanted. They launched a new savings product 6 weeks later. And the uptake from the consumer base was 80%, right? That's how they're participating in this thing, right? And also interestingly, if depending on how good you are, if an advisor you are, as a consumer advisor to the rest of the community, that helps you determine what interest rate you get from the bank on your product. Think about that. How good you are at advising other consumers on the website gives you a rating. That rating goes into your credit score that allows you to determine the interest rate that you get on your product from the bank. So this bank, they are not really, they're not manufacturing everything themselves, right? So they have an API concept, technology concept. They are trying to, so just let me explain before I go here. So in their version of an account, you can have up to 85 currencies. At the exchange rate available to institutional investors, because they have a relationship with an institutional investor provider that's providing them 85 currency transactions. So as a consumer on your mobile, you're sitting there going, I'm flying to Melbourne today, so I'm going to need Aussie dollars. So instead of going to the bank or to cash point or going somewhere, you just kind of click, and there's Aussie dollars in your account available to you now, right? Available on your credit card, on your debit card. You can also say, well, actually, I want to move some of this stuff because I just want to, I see elections coming in Europe, maybe euro is going to go up and down, I'm going to trade in there. So it's kind of a more than just a checking account, it becomes as a trading account. It allows you to invest in commodities like gold, silver, and so on by saying I can buy small quantities of gold through another provider into my accounts. I can keep track of that. Interestingly, it allows you to lend money to another consumer of the bank. So instead of, often, you have these things where a brother comes up and says, hey, give me some money. And, so instead of doing that offline, they're allowing you to do that within the bank. And instead of charging you interest rate, so you charge your interest rate, you say, I will provide this loan to you on this interest rate. And the bank is charging you a transaction fee. Yeah? So that's kind of thinking, right? In saying, so what they're trying to, think about what they're trying to do. They are not trying to solve for what you think they need. They're trying to solve for what the consumer is saying to them they need. Consumer saying, hey man, I'm traveling all the time. I need to have currencies and so on. How can I get access to currencies at a good rate? I have this need. I have, instead of just putting money into currencies, also because all of us save money in locker boxes here, right? Safety boxes. We have gold and so on sitting there. Instead of buying this big, I just want to buy bits of gold when it makes sense to me. I have this informal lending environment going on. Can you create a product specifically for me so I can lend to my family and so on and business partners so it doesn't become a off the record conversation? Then I have to track and do the legal paperwork. But because by doing that loan within the bank, I now have legal paperwork. It's a loan. Right? So I no longer have to deal with, so they are trying for solving for the use cases that the consumer is thinking about. Right? But interestingly, this is the average US cost per IT per user. Their model is competing, they are at $15 right now, right? So that's a 10x thing, right? They're trying to compete with these guys. That's their benchmark, and saying Google does it for sub $3. How do I get my technology cost to that level, right? So this is a little bit dated, so because they have now expanded the business, doing a bunch of other things. But the bank, think about the bank for a second. They had at the time about 300,000 customers. Fully regulated German regulator, right? So all the the heaviest regulator in Europe. Balance sheet, consumers. They have a call center. They have customer service, coffee person, CEO. How many people do you think they had? Product, IT. How many people do you think they had to run 300,000 consumer bank in Germany? 200. 200?
50, 45, 50 people.
Have you been listening to my presentation before? That's exactly right, 45. 45 people. Yeah. So that's kind of the mindset, right? It says, okay, we can use our very committed, very think about the loyalty with their consumer completely. They know every consumer. They all participate in the community. They're all socially connected. Yeah. And 45 people running this bank. They just launched into UK. A major bank, right? UK, competitive market. How many people do you think they had to launch their bank in the UK? Again, fully regulated, all the stuff, get access to consumer. I'm going to my source now. What do you guess now? What's your guess? New bank in new country. 5 people. Right? That's what they're thinking about, right? So think about when you guys launch a branch, how many people you put behind it to launch it, right? So it doesn't mean that suddenly all the people are disappearing. It's just that what you need based on the technology and stuff they're building is very, very different, right? This is also their customer profile, right? This is a new bank, no branding, no branches, nothing out there, no. They spend for the first 5 years they spend $50,000 on marketing, yeah, which is nothing, yeah. This is the consumer base. 16% in the digital native young ones, and look at the 11% of 60 plus, and look at the distribution of the consumer. Yeah, this is happening across all our businesses that we see. Yeah. This is a company called Trove. This is a little bit more insurance. They are focused on kind of providing a treasure box, an electronic digital treasure box where you can put all your goods. So your grandmother's chair, your furniture, your paintings, your iPhone, your laptop, everything goes into Trove, and it acquires a value because they know that you're there. And so if you're painting, they get through an API, through a linkage, they're providing the real-time value, so the certification is there, right? So they provide this thing as a record, right? But with the record comes ability to then lend and borrow. Because suddenly they know what value you have your paintings and so on, they know exactly what the value is. If they want to lend against it, to provide a marketplace to lend you against it, they can. Imagine now if you had a painting or something and you want to borrow money, you have to go probably in a street corner somewhere or find some private banker to help you, right? This is now it's completely different, right? Then they have, as you put in your iPhone, they say, or Samsung phone for that matter, as you put your phone in there, they kind of comes up and says, by the way, this phone can be sold on eBay for this much, and you can get a newer phone which allows you to do insurance in a cheaperly because it's a newer phone at the same time. Yeah. At the end of the day, what they are is an insurance firm. Yeah. But they are not really an insurance firm at all. They are just a data analytics firm. The insurance is being provided by other major insurance companies. The underwriting is being done by insurance companies. So all these guys are a data analytics technology firm which is taking consumers, putting their goods in, creating different values for the consumer, solving for their needs. Yeah? So instead of providing content insurance for the house, which says how many, you have 5 rooms, 3 bathrooms, 5 bedrooms, 3 bathrooms, here's your thing. They're saying, what specifically do you want to insure? Do you want to insure your laptop, as a student, your, phone, your bike? Okay, you can do that. You want insurance for the next 2 hours for the bike? We can do that too. And by using the data analytics and technology, the premium they're providing is at micro level. Right? So instead of saying, look, I want to get insurance, and that's going to be a lakh rupees and stuff, and you do it, and so that's why most people don't do it. But now if suddenly that's 10 rupees, and I can have my phone insured while I'm going out, on a journey from here to Islamabad or something, that's fantastic, right? And that's what they're trying to do. So it's saying what value matters to you, at what point in time it matters, and then we have an interaction. But they also create the interaction. So now they know as soon as you add something new, right? So for example, if you get a new house and you add that new thing because address comes up, they now know you have a new house. So they can interact with you and say, hey, do you have a new house? Do you need some mortgage financing? We can have some other folks out here do that. Do you need some lending? You taking your painting off? Is it something okay? Is your cash flow needs okay? What is it going on? So they have real-time interaction without even wanting to have the interaction. You are giving the information. You as a consumer, you are giving them information, and they're using very, very strongly to kind of provide the products that the consumer needs, right? Okay. This is Jumo. This is for our friends in South Africa. You will know them. They are actually coming to Pakistan. So they are one of the companies that we have. And I'll kind of run the video, and then we'll talk more about it. Yeah? Okay. Sorry, just loading up. So this is a fantastic company. So what they're doing, right? So think about the SME lending space in the emerging markets. And think about how, as financial institutions, we've been trying to address that space. About how do we get the right kind of credit rating, credit bureaus, information, how do we have our bank account branch managers and so on go out, get to know them, where they live, what their house is like, how many cows they have, how many goats and so on. They're trying to get that information so we can provide lending. Yeah, that's what we've been doing the conventional thinking for a long, long time. And of course, it's a big deal. It's a big struggle, and they're remote, and how do you get there? And it's a very costly business. So what Jumo came up with is a simple idea. We said there's more correlation. Think about this: more correlation about how someone uses their phone and tops up their mobile wallets than what salary and credits and cows they have. Okay. So what they figured out by using really super data analytics is that the amount of money someone tops their phone up with, yeah, when they do it, what time they do it, who did they call, when they call, how often they call, all has predictability about their ability to pay back. Yeah. So what they've done is done a partnership with telcos, where they become partners in the mobile wallet for each of these telcos. And what they do is they get the data already. So I have the data already. And they have used a very simple Nokia phone technology, none of the smartphone stuff, just a data menu, right? 1, 2, 3, 4. And so someone opens their phone up and says, I'm a partner on Telenor or whatever. And they say, I need a loan. As soon as the loan information comes in, because they already had the data, they already know whether they were going to approve this customer or not. And within 30 seconds of that coming through, they lend the money. And the money is then backed through the mobile wallet. That's where the credits are, right? So they kind of use it as a collateral to lend money. Short-term lending. So they started from nowhere. They've done 6 million loans to 2 million individual customers. Yeah? And they are in Kenya, in Ghana, in Tanzania. They are a South African company in deep conversations with some of your friends on that list of your competition in Pakistan, right? In the next few months, they'll be here. So thinking about how they've completely changed the way we think about SME lending, right? So all the individuals we saw there, they were all SMEs. They were all business people, right? Who are waking up and saying, I need to have money to go have a net to go fishing. I need to have fish to open my restaurant. So they need that capital. And so the interest rates on the capital are high, but they are as a working capital loan, right? And so what they're doing is doing small loans, and now they're moving up the chain to a monthly cycles and so on. And you know what the default rate was in a first little cycle? Ignoring a little bit of fraud, but it was a specific country thing. So my guru there was
2 to 3% less.
much less. Less. It was like 0.005 something, right? Their default rates on this stuff. And we've seen this. We've seen this from all kinds of statistics on microfinancing, include that the default rates on these things are very low. People are really, so it's about, again, the thinking about, they completely use mobile, right? The old standard mobile, didn't think about, everyone talks about, great mobile, but it's a smartphone, right? No one has smartphones, penetration, you hear that. Oh no, we can't do that because we don't have data on them. We have to open a branch up and the branch is too expensive and so on. All the excuses, they just took a blank piece of paper and said, people want things, what they use mobile, they use top up. Can we use that data somehow? We have the technology, we can use it real time. It's real time, it's not historic. I know your data. If you change your behavior on your phone, I know it right away, like that, right? And I'm using real-time data, right? Almost the conversation goes, this is what we were talking about before, about paper-based. When you rely on paper-based information, right, and kind of collect information on someone, because of the nature of it, historic. So my daughter's version, that's Victorian age, right? The world has moved to real-time. So if I give you my salary information, that's at least a month old. Right, and so as soon as you're basing all the information, all the incredible analysis you're doing is something that's a couple months old, and I may have changed my job and doing all kinds of things, and so you have access to my transactions, you have access to everything I have, checking, saving, card, but you're not using it because you're thinking about silos, right? So that's the idea here. The average book size? Loan size? So these guys started here was small. The example I gave you was 6 million. They started small. They started between somewhere between $10 to $50. And then now they're getting bigger. So now they're going up to $5,000, $10,000 because they're getting into the monthly cycles and kind of figuring out. So they're extending that same technology and data and so on to a larger cycle and kind of figuring out what are the data points they need to make that happen. Right? But they have awesome penetration now. Their brand is very recognizable. Sometimes so they're using the distribution partners, they're bringing financial institutions in. So financial institutions providing capital, regulatory environment, and then they're using data to then provide loans to the telcos, right? So telcos are liking this because they get loyalty, people sticking to their wallets, and they get the use of data and so on. That's where they're making the money. And they get a little bit on the lending, but they don't really care about lending. The financial institutions, of course, they're not getting access to a new market. And these guys are making money in between through some sort of transactions and also interest rates. Yeah? So they are now extending the book to word wider. Okay. So, okay. All right, so now we would change tack a little bit and talk about what does the environment look like? What do we have to do to make this happen? This is the Fintech Futures report that I was the author of that came out from the Bank of England and the FCA, which is a UK regulator. 10 Downing Street was involved in this thing and so on. So there were like 10 people that we had to go present. And really the idea was, how do you put the UK at the center of Fintech? What do you need to do? Right? What do you need to do from a regulatory point of view? What do you need to do from an investment point of view, and so on? So it's really this is and that's why I say this is still the early stage, right? This is about creating the new world order. How do you think about the new world order? What does the concept look like? It's what does it take to make this happen, right? You need to have talent, and you have guys in Pakistan have plenty of talent, right? I see it every day. I play with them and invest in them, and so it's entrepreneurs first of all, right? But you have to be able to, the idea, the capital available to them right now for investment is very, very poor. There are plenty of people who want to invest in you once you are successful. Yeah, and so it's like then there's a line out there, and there's people that want to invest in Anthemis today is a line. When I needed the money in 2010, there was no one out. It's like, okay, here's my savings, and here's my mortgage. So it's that kind of development market, and saying, are you willing to then bet on the innovation? And where this market is, if you think about venture mindset, the venture mindset which is very different today. Today you guys are, the kind of environment is, generally speaking, I'm making general statement, is where if you come up with a new idea, everyone in the organization says, Khurram coming in, that better be successful. He's the chief innovation officer. He better be successful. We all eyes on you, right? And God forbid if you, muck it up, right? In this world, the whole idea is to experiment, and really fail quickly, right? So only because you fail quickly and you fail then you're on the edge, right? And if you're not failing, but you have to fail quickly. It's not like you can experiment and then say, okay, I spend $1 million, but really actually that was a bad idea. What you have to do is kind of, instead of having $1 million, you say, I will take 50,000 and invest that, get to the next prototype, this makes sense or not, reiterate, and if it doesn't, I write it off. Yeah? And not be afraid to write it off, and almost a failure has to be celebrated in the organization, right? And so this is where the regulators and, as we talked about here, the policymakers, central banks, Andy Haldane of the Bank of England, his number one objective that he's publicly stated is to make the Bank of England redundant. Yeah, that's how he's thinking about it, saying, how do I make myself redundant? As opposed to being in the center of the conversation, how do I make it I'm just part of the conversation. Which is what you heard a lot here too, right? Is how do you the regulator is really trying to push you guys to think about broadly. And a lot of what you heard from Ali Saab was really to say, how do you make that happen? Yeah, and I'm sure we'll hear the professor also talk about this stuff. This is also where the financial institutions come in and the academia come in. And, so we are working with these guys and trying to figure this out. This is our version. Every year we get together with all kinds of people around the world in the mountains in France, in Maribel, to really bring people from different walks of life. And, because we have no monopoly on good ideas, right? So as you think around and look left, right, and center around you guys, and all of you guys, if look and feel the same way, meaning that you think the same way, you went to the same kind of schools, you came from the same kind of background, you have learned, you have same kind of organizations, the chances of you being a disruptive company is very small, right? So you have to, it doesn't mean that suddenly everyone has to be weird and everyone has to wear jeans and stuff. It's nothing to do with how you dress up. It's like you have to have people from different backgrounds, different ideas, different concepts, different personalities. Some will be extroverts, some will be introverts, some will think differently. Some will come from telco backgrounds, some will come from financial backgrounds, come from design backgrounds. So some of our best folks, we have who's designing some of the cutting edge companies right now for us, came from she was a fashion designer, shoe designer, based out of Hong Kong, right? And she's now designing financial services businesses, right? So that kind of thought process. Then I will skip that. It's really, this is the issue, right? It's as the technology is coming through, the big challenge for us is a lot of people are being left behind, yeah? And there's a lot of fear out there, which doesn't necessarily have to be. There's a lot of opportunity in what we're talking about, yeah? And so this idea, my challenge, Adisab, is that in 5 years' time, if you think about it, think about a model where the cost base is now 10x. So if it costs me, 5 rupees to open an account, run an account at the bank, as opposed to whatever the cost is today, then suddenly I can offer that to anyone anywhere, right? I don't have to go create a special term called financial inclusion. Because the people it's not that people don't want access. All the 6 million customers that signed up to Jumo, right? They signed up. Why haven't they signed up to all the bank offerings? It's because banks never offered them something that was useful to them in a way that they could comprehend, right? So this is what you talk about language. If all your stuff is in English and comes across on fancy phones and so on, guess what? Most of the folks living in Pakistan don't speak English and come across in fancy phones. So it's like, how do you simplify the language? How do you make it so simple for them to interact with you that as a conversation was the Asan account, right? It's like, how do you make it? And they also don't want the full fledged. The consumer doesn't want everything you have to offer, right? They want access to payments. They want to be able to do some maybe savings, right? Maybe some insurance, maybe, right? They don't need fancy investment vehicles. They don't need fancy credit cards. They don't need mortgages. All that stuff can follow as the requirement changes, right? So that's the way you think about it. So in my view of the world, and I've said this to I was speaking in the Bill and Melinda Gates Foundation, that the term will disappear in 5 years, 5 maybe 10 years, it will disappear. We'll look back and say, what was that thing we used to talk about? Because this term is there because we think about it from a current cost structure, yeah, and current business model, and we say, okay, we have to get these people in, right? And that's because we are blinkered that way. We're thinking that way. I'll skip this. There's a whole blockchain thing, but I'll skip. I'll take, if you have questions, we can talk about it. Just conscious time. This is my point about diversity in your teams. This is really a opportunity for us to rethink the way we organize our kind of company and structure, and how do we bring people in with different mindsets and creativity. And that doesn't mean, also the same thing applies, by the way, to folks that are here. How do you add that element to them? What's the skill set required? This is not, you don't have to be specialist in current accounts to be, to have a career here, right? It's like, how do you add some different skill sets to think about this? Yeah. This is my point around, just because someone mentioned Uber or, doesn't make it a great company, right? There's a lot of noise, and you have to apply your business lens to it. In the mindset that says, I'm going to experiment, I'm going to fail quickly, but my experiment is about, I'm trying to find the business, right? I'm trying to find the fin part. You can imagine how many companies, as an investor with $500 million under our AUM in our company, how many people come to us who have saying, I just found this fancy app where I can share my bill with other friends and you can split the bill. And I go, yeah, that's a great business, sure. No, it's not a business, right? It's not even a product, it's not even a feature, right? So it's like, it's that kind of, all the experience you have in the room around how to run great financial businesses, you just have to take that and apply it to this new setting, right? And the last point is, this is hard, guys. Yeah, no one, I don't think Ali stood up and gave you the call for action and said this was easy. This is hard, and you have to almost take that view, because it's not the analogy is you won't get there by lighting another candle, right? So you have to think about what the change is, and it's about small steps. The saying about how do you eat an elephant? Not that you're supposed to eat an elephant, just saying, But how do you eat an elephant? Does anyone know? One bite at a time. Same thing around this fintech space, right? It's like there is a lot of noise. We'll be spend a lot of time around focus on what is really the strategic framework, what's really happening, forget about the individual names. People get confused about like 20,000 names and stuff. I don't even know most of the names. It's like, well, what are they trying to do? What are they trying to solve for? What's the consumer need they're trying to solve for? If you can understand that, that gives you the signals. And based on the signals, then you can start figuring out your own strategy, right? And your own formulation. And this is by no means, it's not a sprint. This is not a 100-meter dash. This is a marathon. You have to think about this in 5, 10, 15 years terms. The companies we invested in Simple in 2009, we did not think it would make us money for 10 years. That's the lifespan we're investing in. The blockchain stuff is not going to change stuff tomorrow. In my mind, it's 15 years away. A really exciting stuff happening, really, really important stuff happening, things to be aware of, but it's not something that you need to be, deep, experienced guy on blockchain certainly. So I hope this helps you guys think about this, that mobile is not digital. This is real. This is real. This is global. This is really it's not, and I don't want you guys to feel horrible about, say, sometimes people walk out and say, oh my God, what are we doing, right? We are doing what we've been trained to do for a long time. It's really worked well for us. The bank, financial institutions that we have are awesome institutions. They've been around for a long time, providing great service, great products. But we have been used to thinking about, that's the tools we used, right? And now the modern world is about thinking about the new tools, new set of experiences, along with the experience that you have, and how do you formulate it in a new way, right? That's the opportunity. I've been in financial services 25 years, right? Working around the globe, 14 countries have lived in there, carried 3 passports, all kinds of stuff. I have never been more excited about our industry than I'm today, right? This is really exciting time. And I think this is where you have to be bold. And this is where I'm really grateful for Ali's invitation to come in and talk to you guys, because I think this is about the vision coming from him and from you guys and the leadership. This is time to be bold. You have the opportunity to actually completely, because at the moment the reason you think about these guys as competition, because you try to act like them. You say the only way to compete with them is to open more branches, get the IT system right, get the infrastructure right, get the balance sheet right. That's what you're trying to do. And so that's why, so you look up and say, MCB has more balance sheet, more capital. UBL has more capital. This opportunity here is to completely leapfrog them. Ignore what they're doing. Completely forget about what they're doing. You don't need to open another branch to compete in this space. To be a digital bank, like what Ali Saab is saying, you can completely leapfrog that stuff, right? And that's the challenge. And that's the opportunity. And now remember, you guys can't go home unless you ask me at least 5 questions. So thank you so much, and happy to take questions. Yeah? Please. Demystify blockchain? I'll try. Yeah, please.
Keep the questions, quick answers.
Yeah.
Because we have a Q&A segment.
Oh, you have? Okay.
We do,
Okay.
but we can do quick.
Okay, so maybe you take 3? Yeah.
3, yeah.
So blockchain, how do I explain it? I will explain it as an example. Yeah. In the old days when you and I used to buy property, we used to have a piece of paper which said this property is yours, right? And it was like signed, and maybe someone stamped it. And that was the only piece of paper that had ownership. Yeah. Then I took the piece of paper from you, and you signed it in my name and said, okay, I've transferred this property to you, and it became my property. The only way I knew that was my property was either piece of paper. If that piece of paper got burnt or stolen or something, that was it. Over time, then we created all these different institutions, infrastructure around it to say the paper, broker, lawyers, central registry. That's what we did. Yeah, but it's a very manual, paper-based, multiple agents in the middle. Blockchain allows you to create a token, a public token and a private token, and the public token has information that there's a property out there. The private token has information that you own it. You privately can transfer that token to me, so I have ownership. Everyone knows publicly that ownership transfer happened. They don't know who to where. Yeah, unless I give them access or give the right authorities access to that chain. Right? So suddenly that token is sitting on the cloud. I don't need any other intermediary because that is a legal transaction. Yeah? And that transaction can happen online, offline, through a mobile, it doesn't matter. It's the same way, if I'm transferring money today, if I transfer money from here, I have to use SWIFT to send money somewhere else, right? But now I have an opportunity to put money into a token from my phone. Money goes into a token. You have access to the token. You get it when your phone is online. It doesn't even have to be online all the time. So suddenly that's the new token. That's blockchain. That's the promise of blockchain. Of course, what has to happen is all the infrastructure, all the regulatory requirements, all the legal stuff has to take place. That's why I think it will take 10, 15 years. But that's the opportunity. You eliminate so many things. And you can take example after trade finance is a great example. You can eliminate a lot of stuff in trade finance by using that token. That's the simplest way I can explain it.
May I just try and add to that
Sure.
analogy? And if I get it wrong, please correct me. You can hear me, right? Yeah. Because the token is on the cloud, in one sense, everyone has access to it.
Yeah.
Which is really vital. Meaning, everyone already has a record of this property transaction. Now, you may not have access to the underlying exact ownership record as to who has the property, but because now everybody in the system has a copy of this and every other transaction, since it's in the cloud and since it's copied, updated instantly, that means the transaction, the truth of the transaction, the verification of the transaction is on everyone's record.
Absolutely. So in the future world, you can imagine, right, that you will have your own personal blockchain. Yeah? All your vital information, your financial records, your health records, your insurance records, your family records, your will and stuff will sit in this blockchain token. And you will then provide access to people that you want to provide. A lawyer comes in for the will, the doctor comes in for the health stuff, and they're getting. And so that's a central piece. And that's how the world would operate. So that you will have control of your data, and you choose as a consumer who am I going to provide the data to. Right? So that's where it's going. Yeah.
When we think of innovation,
Yeah.
so why do we need to create? I mean, why do we need to think of things to get to our consumers cheaper? Isn't it just easier for us, which maybe 2 years behind as a country or as a bank, just acquire systems that have done well, that have successfully done well, proven to have done well 18 months ago in another market?
Yeah.
Isn't that just easier?
You could. It's a one of many strategies, right? But if it doesn't work if you acquire a system and put it in the same organization structures as you today, because you will kill it, right? So the idea is that if you want to create really disruptive stuff, you have to think about it more than just acquisition of technology, right? Because you just went back to I'm going to acquire technology. And technology is not the answer. Technology is part of the answer, right? The answer is what's the right business model? How does it fit into the consumer landscape that you're trying to solve for? And so that's why you have to step out of your current environment. And there's a lot of great stuff, the linear innovation you do, talk about, that's fantastic. That's saving 30%, 50%, efficiency and so on. But really, if you want to disrupt and leapfrog, then you have to think about something separate. And it doesn't mean that it's always separate. It can be all kinds of manifestations, but you have to give you time and space to think. You cannot do it if you're running the business today and also trying to solve for 10 years out. It's not possible. No one can do it, right? So you have to as an organization, give someone that space and then see when is it mature enough to come back into the organization. Yeah, that makes sense.
I'd like to add here, Shaikh.
Please.
One is that you have to indigenize, even if it is within the same country.
Yes, very good.
Anything that was successful in Kenya, for example, it's not essential that it will be successful, and vice versa. So it's extremely important, in my view, to indigenize. If HBL was successful in something, that doesn't mean JS would be.
Exactly.
They're two different organizations, two different cultures, two different way of doing things. So it's extremely important. It's not a bad idea to borrow an idea, but extremely important in my view is to localize it, indigenize it as per your organization's culture.
I think that's great. And if I could just add to that, because sometimes the success stories become Achilles' heel. So the M-Pesa success story, which I'm not going to take the thunder away at all, is actually a very unique story because of Safari.com, right? Has 90% market share, which is not correct in any other market. So when people talk about it and saying we'll just take M-Pesa as is and just apply it, and it doesn't work, no. Of course it doesn't work. It doesn't, which is exactly your point, right? It's a very unique model. There are lots of interesting things in there, but you cannot just take it and acquire it and say, that's how we solve for financial inclusion. So thank you so much. We will, please. I can't say no to Hornum.
Nadeem, can you shed some light on where we are talking about the customers being humans?
Yeah.
And we are entering into the time where machines will also be important. So do you think currently digital and mobile is being the primary channel where apps are going to take over, which human consumes? So how does IoT in combination with AI will impact this mobile channel? And in the future, on our behalf, machine will do the stuff by themselves, and we are not even required to initiate the transactions.
Yeah. So I think. So two ways to answer this question, three ways maybe to answer the question, right? In all the technology revolutions ever happened over time, which is Carlota Perez's book, that question was always there, right? When we moved from the agricultural age to the industrial age, everyone was, oh my God, this is it, we're all going, everyone's going to a factory robot. It requires a shift of skill sets, right? And the same thing is happening now, it requires a shift of skill set. There is plenty of studies which says technology does not eliminate human interaction. The kind of interaction is different, right? You don't need someone to do the basic stuff, right? Don't need someone to print my statement and mail it to me in an envelope and so on. That's not required. But the interaction which says, I understand the complexity of your world, yeah, and then I can simplify that and provide you simple answers. That's a very human trait. Yeah? So it's like if you imagine financial services in the future world being like electricity. Yeah. So you walk in. I don't know about you. I don't know nothing about electricity, right? I switch a light on, it comes on, great. If it doesn't come on, call someone generator. It's but there's lots of stuff happening to make that happen, right? And so from a consumer's point of view, financial services is just like that. We, as the institutions, have made it more complicated. You have forced me as a consumer to learn to think about current account, savings account stuff. It's about money is electronic. There's very little physical money actually, right? So it's electronic. So all I have to do is provide you some inputs and saying these are my needs, and you now come back with the answer of what should I save, what should I spend, how should I spend, when and how, and based on my needs, you come in time and give me the in-time information. That's awesome, right? So I think it's becoming, it will be a world where humans will certainly be very, very interactive. The skill set will be different. Yeah? All the underlying data, all the historic data of all these transformations, all the IT studies and stuff point to that. There's never been a case where suddenly all the humans get, and robots are walking in. It would be very boring for me to come and give a speech to robots then.
Thank you
Yeah?
very much.
I do have an ask, one final ask, and I will ask you guys to come here too, please. Yeah, if you don't mind, please. So this is, and I'm going to ask you guys to all stand up as well, please. Yeah. So this is, when Ali sent a note and he talked about it and says, welcome, marking today as the welcome JS Bank to the Digital Days. So I thought we'll do a selfie,
That's great.
So here we go, right? Can I get you guys in there? Awesome.
That's great. Great. Yeah, you sent this to us, right?
We'll do that.
Excellent.
Thank you so much, yeah? Thank you.